We are off to the races. So my finance dad joke to warm everyone up. What is an investor's favorite garment or article of clothing? It is a vest because they got to stay invested. Thank you. I will be here all night. Yes, I take pride in that joke. So let's get started. This is another warm-up question for you guys to type in below. When was the last stock market crash? We always hear buy low, sell high. So what the heck? When was this last crash? Was it 2008, 2020, 2022, or 1999? So we got a couple 2008s. Other people could type it. Oh, someone, Andre, you went completely off the choices that I had and said 1929. 2020, 2020. Let me tell you guys real quick that no one has the correct answer typed in yet. So I hope that kind of shows us that we're all in the right place because we're about to learn a couple of new things. Andre, that is a very creative answer with never, since the market did recover every time. But we're going to kind of go with the traditional definition of a crash, which is being minus 20% or a fifth of the stock market value or perceived value wiped out. So yes, Mary Lou says 2022. In fact, we are living through a stock market crash right now. And that's why I wanted to do this, because I'm like, if I could get new investors in when we're experiencing a market crash, well, they're going to get an advantage that I didn't have when I started investing. When I started, it was 2015. And it was an all-time high for the market. So luckily, I ignored all the noise and just started investing. The crash before this one was in 2020, and before that, all the way in 2008. So 2022, we actually, for one single day, went into minus 20% or a fifth of the stock market being wiped out. So right now, every single dollar, basically, no, not every dollar, all of my gains for the year are wiped out. My stock market portfolio went back an entire year's worth. So you guys are coming in at a great time to start investing. That's why I'm extra passionate about today's event. So we got to talk about trauma and money first, because obviously I've never met a person who has not been traumatized about money. Now, not every bad experience is traumatic, right? We got to recognize that too. You might have a rough time, but it doesn't mean you're going through trauma. Okay, so this is the trauma monster, right? If we do not face this beast as soon as possible, it's just gonna grow bigger and badder. Eventually, we all have to face the beast. Luckily, it's kind of cute. So let's go in and talk about my beast. Oh my gosh. Oh, I don't know if you guys saw that right there. That was terrifying. But a little bit about me. So I was born, I don't know if you guys know this, but I was born in the Ukraine. So right now, my nation where I was born is at war, terror, everything in the book, or almost everything in the book is happening there. I'm in a good mood right now because I'm in the United States. But as soon as I think about where I'm born, my heart breaks because it's terrible. I love Ukraine. I actually love Russia too, because I love Russian culture. So this is like a little civil war is happening. So back in Ukraine, we lived under communism for the longest time. So I'm coming at this with a perspective of, look, I have been here. Rob Terrell got into here. I have been existing in kind of both societies, capitalism and communism. So I actually never really liked money because I read a lot about slavery. I read a lot about terror. He drawing. So I read a lot about terror, and that was really, really tough for me to kind of figure out, like, is this really something that I want to be involved in? And I decided to keep going and learning how the heck do people like live happy lives under this type of system. So I kind of realized that money is a form of expression. So I started learning to express myself with money. Obviously, a lot of people say money is a form of free speech. It's a way that people vote, unfortunately or fortunately, but there's much more to it. We vote for the world around us with dollar bills. Every day after school at my high school, people would vote for hot Cheetos because they would give $1 to the store. Now it's like $1.79 or $2 because of inflation, and they would vote for more hot Cheetos. So money is a form of expression. For me, this was a very tough lesson to learn, and it took me a very long time to kind of get over my feelings about money, and it could be a force of good. Some people believe that money is the great amplifier. If you're greedy and you have a lot of money, you will be more greedy. If you are kind and giving, you will be even more kind and giving with more money. So whether you agree or not, that's kind of my perspective, and you can totally have your own. Andre voted for chili limes. Andre Bryant. Okay, I know who you are. What's up, my friend? We actually used to play Yu-Gi-Oh back in 5th grade. This is my grandma, and she kind of changed my mindset about money. So she didn't know the first thing about capitalism besides all the Soviet propaganda, like it's a bad thing. Under capitalism, there's homelessness and all sorts of terrible events. But she was very frugal because she's a World War II baby. So World War II babies, I don't know if your grandparents or your parents are World War or great grandparents are World War II babies. They different. They very different. These World War II children, they learn to save up resources. So my grandma, she hoarded everything. She wanted to make sure that we were covered for tough times. And a lot of my early money memories comes from this. A horrible experience was my mom finally saved up enough for a new home. And as soon as she moved into a condo, they charged everyone $10,000 to repaint it. She happened to come in at the wrong time. And my mom started crying. She made this huge move. She did not have that type of money. But because my grandma was a World War II baby, she just pulled out 10 grand out of nowhere. And it's like, okay, why are you crying about money? Right? We cry about lives. This is not a big deal. And my grandma was not like a high income earner. She was living off Social Security. She just was so frugal. She only bought what she needed. Now that's kind of extreme, right? We want to be somewhere in the middle, but frugality and being cheap are not the same. With frugality, I'm a frugal person. I'm not going to spend $100 on pants. So with frugality, you still have all of these experiences in your life. And they're not necessarily all expensive. A lot of this was pretty much free 99, except for this one Dave and Buster's pictures. So every now and then, sure, you spend money on something that is disproportionate. You might buy a $40 sandwich that you don't finish, but that should be a rare event. And with this type of mindset, we have more capital to invest. And we're about to get into the stock market and how it works. But I hope that this kind of alleviated some of the psychological damage and harm we may have from our trauma with money. So frugality is the mother of all virtues. Some wise guy from a long time ago said this. Let's soak that in. I'm going to stop talking for 1 second. I'm going to give you guys a quiz question. So you guys can answer this. I'm going to launch it. If you have an old version of Zoom, you might not see this question on your screen right now. And all it says is, you can vote in it right now if you see it. I hope you all do. It's called, how often do you talk about money? So I will talk to you about frugality right now and one more time. What does this quote mean? Frugality is the mother of all virtues. So everything comes from frugality. If you're into protecting the climate, well, being more frugal is going to do that. If you're into reducing waste, well, being more frugal is going to do that. If you're into voting for the world that you want to see, well, frugality is spending with your values. So you're going to vote for a world that you value, instead of being on autopilot and letting kind of the system manipulate your behaviors. Does that make sense so far? We do not want the system to manipulate our behaviors. When we walk into a store, right, we have everything, they put it on eye level. We need to be able to navigate capitalism as we know it, the system as we know it, so we can protect ourselves from it and even thrive in it. Okay, so I'm going to end the poll. We have about 57 participation, 57%. That's okay. And with that, let's go. Some people are saying, hey, I actually do talk with many of my friends consistently about money. That's the most common response. Some people said very rarely, and some have family meetings once a week about money. So that's really cool to see. We're hopefully going to catch everyone up today. If you're in here, give yourself a pat on the back because you talk about money, and we will talk about it. There will be an open exchange Q&A, and you can ask whatever questions you would like. So what the heck is an investment to begin with? Notice that this is called investment 101, right? Investing 101. On the left side, you will see things that are typically associated with investing, while on the right side, these are liabilities, things that people buy simply to kind of have, and they lose value over time. Now, there's always exceptions, right? Some cars can be collectibles. That's why I have this little Spock thing right over here, or sorry, not Spock, Star Trek, because some of the biggest, wealthiest people like Jeff Bezos actually park some of their money in collectibles, right? So I don't want to undermine like things like that, but we are going to be focusing not on NFTs, not on ramen is not a liability, not on Star Trek collectibles or Star Wars or Pokemon, not on homes, not on crypto, but on stocks. And I like stocks because the stock market came out in 1885. And that, well, our version of it, or the closest version of our version of it, came out in about 1885. And that's when we started with the whole S&P 500. Dow Jones came a little bit later. So we're going to be delving into that. However, not everyone agrees with what I just said, because Warren Buffett, who is arguably one of the greatest investors of all time, would actually kind of giggle at what I just said. He would giggle. He would be like, that's not necessarily true, because he would not say that Bitcoin or a home are investments. He would definitely not say that. Well, he might say NFTs might be some sort of investment. Actually, his definition is an investment is something that provides one, value, and two, has cash flow. Does Bitcoin have cash flow? Not really, right? If you own Bitcoin, you own Bitcoin. There's no cash flow unless it's in an interest-bearing account. So I wonder what he would say to that. But it doesn't come from business. I guess Bitcoin can be looked at as a bank where people lend it out for a profit. So that's something that's going on over there. He would say gold is not an investment because gold is just a rock. It does not necessarily provide value to society. So Warren Buffett would say, yeah, precious minerals, they're just stones. But stocks represent businesses. Businesses have cash flow. You walk into Starbucks and you see people giving money every day. A haircut place, that has more value to society than a piece of gold or Bitcoin. Now, that's just his perspective. So I'm showing you that two investors, Warren Buffett, he's been at it a lot longer than I have. He thinks differently about investing. And you could think differently about investing and create your own rules and what investing means to you, right? Some people believe that gold is a great investment because it does go up in value over time, or perceived value, right? All value is perceived. You can show someone $100 on an island and they'd never seen money before. They won't have the same perceived value as you. And that's what stocks are, our imagination. So here's some of the biggest billionaires in the world, and they're just saying buy stuff, right? That's how they get richer. Us, the people, buying things that we don't necessarily need, things that might not better our lives. But I don't want to associate them with pure evil or anything like that. Instead, I want to take this hour and expand our framework. Let's forget all of our political beliefs and alliances. You hate the Illuminati and all that, you know, Illuminati, I am going to tell them. I am going to tell them. So for now, let's open up our minds. Whatever comes in, comes in. And then after this hour, you can filter what you need. So here we go. I'm not pushing any political ideology or anything like that. But what I am going to show you is the stuff that they want you to buy. So over here, we got a picture. Over here, we got another picture. Over here, we got another picture. Does anyone know what all of these pictures have in common? type it in below, because we got to know what they have in common before we start buying stocks. It's very, very important. I'm going to show you another picture. What do all of these have in common? Here's another one. Here's another one. Rashawn, what you got? What you got? Speak. If you got something to say. I see you raising your hand. All right, no worries. Take your time. Andre is saying humans consider them money. Yeah, they can be. Leslie, spot on. Leslie actually said it. Rising costs. So this is actually dated a little bit. This is a few months old. All of these items have increased in cost. You know what else increased? Stocks. Did money increase? Money actually decreased in value. Let me skip to one more question. So we got another question for you guys. How much did the dollar decrease in value in the last year? And this is kind of like for us to start thinking about money as a liability. Now, certainly it is a safety net, right? We need money to survive, but after a certain point, it just burns up value. And we will show you a more dramatic experience or a more dramatic image of the cost of having too much money. So for the sake of time, I know people are still voting in. I am going to end the poll and I am going to share the results. So you guys can take a look that a majority of people said that money or the dollar dropped 9%. That is true. So the dollar has lost about 9% of its value. So someone who had $1 million, for example, last year, they only have $900,000 of value left. That's pretty gnarly to think about. So the more cash you have, the more at risk you are to inflation. So a lot of people will say, okay, I'll just save money. I feel like a hero, so I'm gonna save money. I'm working on a verse somewhere with that. I don't know if you guys know, but I got raps on Spotify. Check them out. Type in financialism. Follow your boy on Spotify. So they're talking about saving money. This is a go-to, especially for immigrant communities. People like my mom, they feel safe when they see a lot of money in the bank. And I'm like, the bank is profiting off that. Right? The bank doesn't take your money to be kind, right? It's not a government service, not that government services are always kind. They are taking your money so they can do things with it. What are they doing with it? Well, they're investing it. So yes, inflation is around 9%. Here's just a picture of that, just so we all know. And this is how we feel. If we have cash, it is losing value. So not only are we losing because our money, our things are not going up, right? Cars usually go down 30% with 2020 and 2021 being an exception. Here's the money trauma thing. I hope not a lot of you kind of experience like even more trauma right now and you feel worse about money because we are about to feel a lot better about money. But I wanted to get that bad stuff out the way. Oh, it's just so cute. This trauma monster. It's just so cute. Oh gosh. Okay. So right now let's start to feel a little bit worse before we feel better. These are some of the statistics articles. These are fresh. May 27th just happened a few days ago. Our savings rate for Americans dropped to about 4.4%. That means no matter how much money you have, we're thinking in terms of percentages. So if you make $1,000 a year, you have about $40 not a year. Yeah, let's just say a year. Or let's just say you make $1,000 a year. You will save $40 a year. That's unreal. That's not a lot, relatively speaking, to how much you have. But speaking of $1,000, most Americans, more than 50%, they do not have $1,000 saved up. And if that's you, that's okay. That's why you're here. You're here to get better money habits. But also we find that the rate of people who own stocks is decreasing. 58% of Americans own stock. That was like 62% before 2008. So we're just getting back to those levels. That's not good because most of these people only have stock because of their 401ks. Now, some people might have some questions. We're going to save them for the end. And if you do have a question and you don't want to forget it, feel free to write it down in the chat box and we will get to it before all of this ends. And I will stay extra to make sure every question is answered. So These guys doubled their wealth during the same time all of this was happening. These goons doubled their wealth. That a lot of people are angry that that happened. Very mad that the richest people in the world got richer when everyone else suffered financially. Check this out. We have a lot more doom and gloom. It makes sense that right now people are selling their stocks. They're scared. They're terrified. We got a war with Russia and Ukraine. Oh, but that's all the way on the other side of the world. All food supply is connected to those regions. Wheat is connected to that. You like bread? You like pasta? It's all connected to this. We see gas prices rising, and that might not be 100% because of this, but it is definitely a variable. Elon Musk had an email leaked. Tesla, one of the most booming 21st century companies right now. Everyone probably heard of Tesla. Well, 10%. He wants 10% of people working there to leave. He sent an email, we're going back to the office. Hopefully people leave. That's his goal. He sees some very scary times happening. Walmart, Target, these are defensive companies. Usually when stocks go down, like in 2008, companies like Walmart and Target, they have business coming in, just like haircut salons, by the way. No matter what's happening with the economy, people will go get their haircuts. So, well, now there's YouTube tutorials, so people are doing that a little bit less, but traditionally speaking. So we are seeing a lot of very scary things. This chart right over here in the middle, that is the cryptocurrency Luna that just completely got wiped out. So it's not just stocks. This is happening in the crypto world too right now. Very scary. Just in the last 48 hours, one of the Ethereum killers. Ethereum is the second most popular cryptocurrency. One of its competitors, Solana, had some terrible, terrible things happen where people could not move their money for about 4 hours. Things were locked down. And then we got this guy, the leader of the Illuminati, right? And oh, that's Mr. Powell over there. And he says that they're going to start making money harder to access. So even rich people who want to borrow money from themselves are not going to be able to for such cheap interest rate. Now, Rashawn, I think you have a question, but type it in below if you can, okay? And I promise you, I will get to it. And guess what? These goons, they're saying we will do it again. They're going to double their money again. But you know who else doubled their money during the pandemic? My picture didn't load, but it's this guy. Is this guy right over here who's talking to you. Unfortunately, my picture didn't load, but it's me. And so did every other index fund investor. We all doubled our money during the pandemic because we were invested in the stock market when it was scary to be, when every day you were losing money. If you stayed through it and you stayed true to the cause, you were okay. So this is what an investor looks like. I want you guys to think about yourselves for a second, okay? Consider who you are. A lot of people have a lot of negative beliefs, like I have too low income, I'm old, I have time constraints like kids and stuff like that. I'm overwhelmed. I'm afraid. We're going to get rid of all that because you can be low income. There's actually help for people who are low income and want to invest in retirement accounts like Roth IRAs. You get some tax credits. You get some money back. So the government is incentivizing you to invest. People who are old. Look at these two guys. Warren Buffett at age 54 had less than 1% of his current net worth. At 54. Colonel Sanders started KFC at 62. Okay, so get rid of all that. I know a lot of people say, who wants to be a millionaire when they're 60 years old? Well, have you ever met a 60-year-old? Believe it or not, a lot of these people, including Mr. Powell over here, where's he at? Where's he at? There he is. A lot of these people, including these guys, some of their most, oh, there's my picture. That was a good picture. I was sad it was gone. A lot of these people, they actually achieve some of their greatest life's accomplishments in their 60s. People underestimate the whole entire human spectrum. But yes, if you invest harder and faster, you will probably reach millionaire status or have six figures a lot quicker than someone who's kind of doing it passively in the background. But that's okay. To each their own. I just want you guys to be armed. And I don't want you to be avoiding your 60s, because hopefully everyone here, and probably everyone here, will be 60 one day. Most people keep saying, what if I get hit by a bus? Well, what if you do? You probably won't. Do you want to live your life like you're going to get hit by a bus? Or do you want to live your life like you'll cross the street safely? I choose to do that safely. So here's a little bit of new. I'm going to show you guys my portfolio right now and what stocks kind of like, or the dollar amounts that I have invested. And for perspective, I am not a 7-figure, 6-figure earner, right? I know I got Instagram and I got somewhat of a following. I don't make too much money off of Instagram. And my 9 to 5, for the longest time, my average income, it went up a little bit as time passed by, but I checked, there's like a government website where you could check how much money you received from all of your jobs that were over the table. I'm saying some jobs are under the table because you might work for cash or you might get some tips or whatever, you know what I'm saying. But my first job was $16 an hour. That's when I started investing into stocks. $16 an hour. I was putting whatever I can. If I had a good tip day, all of that went into the stock market. My average income was about 51K, and that is including when I started with 16 bucks an hour and when I went to 70K in a year or 80K in a year. Right now, full disclosure, no secrets, I make about $89,000 at my 9 to 5 job. And people make more, people make less. But the point is, I don't make six figures, and I was able to get here, which is a place not a lot of people in America get to. So this is my brokerage account, and I'm not doing this to show off or anything. And some people might be like, that's it, that's all you got. And some people would be like, this is so far out of reach, right? Personal finance is personal. So what I want to tell you guys is, without a 6-figure income, it is possible to have a 6-figure portfolio. It is possible to have a 7-figure portfolio. There's been people, right? If there's one person who does it or two people who do it, then everyone has a chance to do it. There's been people, I forgot his name, but it's a very famous story. He worked like at a gas station. He worked at Nordstrom Rack or something like that, not as an executive, but as someone who was getting paid minimum wage and tips. And I need to find his name. Maybe I'll send a group email to everyone about his story. But when he passed away, he had $9 million. And his family was like, how? Because he was living frugally. He only spent money on what he cared about, things that bettered his life. Right? A lot of us buy things that make us feel better for 30 seconds, but they doesn't better our life. Having this type of portfolio with this amount of money that I have reached, I am now able to basically pull out for travel every single year, and my money will regenerate. Now, I have never, ever pulled out money from my investment account. Ever in 6.5 years, not a dollar was pulled out. Now, I have sold stocks before, but that happens very, very, very rarely, because for the most part, if you're consider people who are driving on the freeway, right? Is the person who stays in their lane, especially if it's the fast lane, gonna get there with high probability? Yes. What happens to the person that's switching lanes? Well, they might get there 2 minutes faster, but their chances of crashing increase so much. So when you're trading and flipping stocks, you're racking up fees, you're exposing your risk, and you're sinking in time. It's a lot more stressful. So what I do is I sit on cruise control. When I buy a stock, I'm getting married. We're not divorcing. Now in 2030, I will be selling some of my positions. I will be rebalancing my positions throughout the years to come, right? Because my goal is a work optional life by 2030, and no pressure. If it's 2035, it's 2035. If I get there earlier, I get there earlier. I don't want this to be something like, you have to do this, go all in, work 24/7. No, I take my PTO days. I make sure that if I need a mental health day, I will earn less money, right? If I don't feel like pushing products on Instagram and I just want to make posts for fun, I will just make posts for fun, because I want to enjoy my whole life, not just the part of it where I'm a millionaire, right? every part of my journey is important, and every part of your journey is important. So this is possible, I believe, for a lot more people than not. Stocks for thirsty people, chapter 3. Right over here, we got Lemonade. This represents the standard business, right? We're going to get into the nitty gritty right now. A lemonade stand is the classic business model, right? How do we know if it's profitable or not? Well, the quality of the lemonade certainly matters, right? The product of the business, how good is it? It matters. The price matters. Is if your lemonade costs $16 and it's the best in the world, I don't know if many people are going to buy it if you're not well known. If your lemonade stand with the best price and quality for what you're getting is located in your garage and no one goes there, well, who cares, right? You have to make sure it's in the right location. So if you can understand a lemonade stand, you can understand the stocks that represent our companies. That being said, there's a lot of lemonade stands, a lot of competition. Do you ever go like, which lemonade stand should I go to? Guess what? They're not all lemonade stands. Some of them are soda. So everyone has their tastes. And at certain times of the season, maybe Kim Kardashian will have a commercial with Coca-Cola. Well, guess what? People are going to be focused a lot more on Coca-Cola during that time. Do you really want your money parked into lemonade? What if Kim Kardashian does it with lemonade? Right now, she's promoting her glutes for Beyond Meat, right? And we saw some stock action with Beyond Meat for a second there, but we never know which one of these is truly going to be more successful. And that's the honest truth. This is what that was a metaphor for. I don't know if I did a great job there or not, but it was a metaphor for the different sectors in the stock market. We got them basic minerals, consumer cyclicals, financial services, Bank of America, et cetera, communication services, and the United States is very popular for that bottom one, technology. We are one of the most tech savvy nations in the world. The US is. So about 25% of our entire stock market is tech, which kind of makes you a little bit worried because in 1999, 2000, 2001, tech stocks crashed hard. Amazon fell from $111 to about $10, right? Who would have held through that besides Jeff Bezos? No one. That's very, very tough to stomach. Now, I've stomached those kinds of crashes before. And you have to make sure you're coming in with that mindset. But this is what the stock market is broken into. And people usually like having exposure to all of this. So, okay, that one's not loading. We're going to skip it for now. If you played it safe and just had everything in cash since 1990, the value of your dollar is $472 now. So if you lost more than 50%, so everyone talks about stock market crashes and how they're scary. Hopefully this image loads. Sometimes it loads a little bit later, like my face. But anyways, if you played it safe, you would have half of the value. Now, a lot of people look at their bank accounts and they're like, well, I have $1,000 today, and tomorrow I still have $1,000. And 10 years from now, I still have $1,000. While the stock market, the number actually changes. This is a psychological trick because a lot of people look at price instead of value. Those are different, right? If something has a price tag of $30 million, that does not mean it's worth $30 million. Same thing with stocks. People like to look at stocks that have like a cheaper price point, but the value is a lot higher. That's called value investing. Warren Buffett is one of the greatest investors who does that. I don't know if you guys saw this, but this is Avatar Aang in the background. It's kind of all the elements of the stock market. I just wanted to make sure no one ever missed that Easter egg. There are a couple others in here if you follow Avatar: The Last Airbender. So I don't want anyone here playing it safe. Now, having cash is important, especially if you live in like Southern California. We could have a huge earthquake and banks are probably going to be closed. You probably won't be able to log on to get your crypto or anything like that. So having maybe $100, $200, $300 in cash in your home is important. Small bills, having $1,000 accessible in the bank is important. But other than that, and your emergency safety net, cash is just going down. It's not meant to make you rich. It's meant to protect you. This is the top 500 companies over the last 100 years. Look at all of the stock market crashes. In the long run, it does not look like they matter too much, right? It looks like the market regenerates. So what I like to do is buy stocks throughout this whole entire experience. When they're low, when they're high, when everyone is screaming and saying it's over, this is the end of the world again, right? Every time the stock market crashes, people say, this is an unprecedented event. This never happened. The dollar is off the gold standard in the 70s with Nixon. We just got attacked on US soil, Pearl Harbor and 9/11. This never happened before. The pandemic, even though we had one in 1911, around there, the Spanish influenza. And at that time, this never happened before. So things that never happened before happen quite a lot. It happens about every 5 to 10 years. And if you've been alive for the last 3 years, we had like 5 events that never happened before. So they're going to happen. And stocks and housing prices and crypto and even Pokemon cards, no one knows how they're going to react in the short term. But in the long run, a lot of these things do go up, especially stocks. Crypto, we don't know fully, so I kind of want to pull back a little bit there because it's only been around for 10 years, while stocks have been around for over 100 years, especially as we know it today. Chapter 4, the laziest path to wealth. I just want to look at this one more time. Here's an extra piece of information. A lot of people say, well, it's with Republican presidents. It's with Democratic presidents. A lot of people like, well, Biden's going to make the stock market crash. Well, Trump is going to make the stock market crash. It actually doesn't really matter in the long run who the president is, who's in control of Congress and stuff, or it kind of evens out, right? Like Apple and Google, they're going to take advantage of whoever's in power, right? They don't care. They vote for both of them. So both people are going to be nice to them. So don't worry about like, oh, this president, because when Trump got announced, people started selling their stocks really quickly. And then a lot of people got excited. We got a business guy in here, and stocks skyrocketed. When Joe Biden was announced, stock also went down and then they went up again. So people get nervous when there's a switch of power. And that's been something we've been nervous about since 1800 or 1700, 1804, I think. That's when, my bad, not 1804. I know this is not important to you guys, but it's important to me. When John Adams transferred power to Thomas Jefferson, basically. That was the first transfer of political ideologies. And it was a very grouchy moment for Thomas Jefferson and John Adams, who were both born on July 4th, I believe. And they used to be good friends and they became enemies, which was very sad. Politics should not divide us all the time, especially not for this hour. So I like to buy all the companies. I like to diversify across them all. If something happens to Microsoft, well, good thing I got Google. If something happens to Amazon, well, good thing I got Cisco. Good thing I got Tesla. So I like to be across sectors. If something happens to technology, well, good thing I got financials. If something happens there, I got consumer goods. If something happens to the whole entire stock market, well, that's okay too, because at least I got my crypto. And if something happens to crypto, well, at least I got my Pokemon cards. And if something happens to everything, at least I got you guys who will hopefully let me sleep on your couch. No, but ultimately, if something does happen to the market that completely destroys it, which has never happened before, even in the Great Depression, right? Even in 2008, if something terrible happens, we have much bigger problems than money, right? We're going to need food. We're going to need clans. We might need a couple of weapons, and we're going in. Your gold is not going to protect you during an apocalypse. You can maybe throw the rock. Your cash is not going to protect you during an apocalypse. People are going to be trading for supplies if that happens. But the odds of that is very, very low. And I want to make this clear. Every single nation, company collapses eventually. Every person dies. The same goes for corporations. The same goes for nations. Rome, right? It was destroyed. It's gone. The whole empire. We're definitely not close to where we were. So eventually, even the United States will collapse. But some of these companies are so big, so global, that it might not matter to the stocks. Now, it will in the short run, but Starbucks, you can find Starbucks on the other side of the world if you're in the United States. McDonald's, the only place you can't find it in is in Russia. But before this year, you could even find it in Russia. So these companies are, in a way, bigger than some nations, and they cross borders. Okay. I hope we feel a little bit better. So this is how I actually calculate, like I make those Instagram posts. In 40 years, you will have, in 20 years, you will have, and we're about to do the Q&A real soon, guys. So if you have questions, get ready to ask them and we'll have some more interaction. This is how I calculate for future returns. I type in how much money I have. This is a compound interest calculator. You just type it into Google. I'll type it in the chat right there, compound interest calculator. There you go. And you can kind of estimate what you will have in the future if you're investing in the total stock market instead of individual companies. With an individual company, you might have $10 trillion. Who knows if it goes to the moon or not? But if you're buying the average of everything, this is the way to calculate for that. And again, things could always be worse and things can always be better. The last 42 years, the market gave even more returns. And I'll show you that in just a second. So let's just say you start with $1,000 and you invest $500 a month. Now, remember, you might be 20 years old or 30 years old or 40 years old, and you just don't have $500 a month yet, but eventually you might. So if you're investing like 100 a month, 50 a month right now, and then later you're investing 600 a month, 700 a month, it will kind of even out, but you do want to push as hard as you can up front. So this will reach $1 million, this type of investing speed and power. However, what actually happened in the last 30 years? Well, we had a lot of crashes. So, well, actually not that many. Over here, we see the 2000, 2001, 2022. This is called the dot-com bubble. This is when those internet companies started crashing. Then we have 2008. But for the most part, are stocks red or green? They're green. Actually, in the long run, stocks go up about 66 to 75% of the time, depending on who you're citing. So a majority of the time, the market is going up. Now, most people jump off over here and they stop. This is where wealth is built. If you're able to invest when the market is going down without selling all of the stocks that you already had in the green, if you can stomach that, then you are much more likely for a greater reward. And that has been true for the last 100 years. So the probability of that changing in the next 50, 60 years is low, but it can always happen. But it's still very, very unlikely, especially with the United States. But it is important to diversify further. You can buy stocks from other countries as well. This is the last 12 years or so up until 2021. So you're seeing like even the COVID year, 2020, stocks ended up 18% up, even though some of us might remember that the stock market did crash in 2020. That won't be remembered by history too much because at the end of the year, it was up. And this is where people doubled their money, because if you were buying when it was down 30%, you got such an amazing deal. It was unreal. But the only way to catch those deals is to consistently keep investing. No one is psychic. No one knows. And anyone who claims otherwise, well, maybe they are psychic. So in the last 30 years, if you invested those 500 a month and started with 1,000, you would not have $1 million. You would have close to $1.3 million. The stock market gave more than average returns. And people underestimate how often that can happen. But you only got this if you kept on buying when Amazon fell from $110 all the way to $10, when eBay crashed in half. So those are the times where wealth is built. But waiting for these moments, waiting for these opportunities It is never worth it because we can have a 12-year run up and then you miss out 12 years of returns. That's what happened to people who waited since 2011. They waited for a stock market crash until 2020. And if they were the absolute luckiest, for 2 days, they had 2015 prices. So still, at the absolute best timing, a person who waits for the crash, they would have only saved they would have still lost 4 or 5 years of investing power. Not to mention, the longer you hold a stock after a year, you pay less taxes on any of the profit. So you don't want to be a minus. You don't want to be chasing trends. You don't want Fox News or CNN or MSNBC or any of those guys to influence you. So be very, very careful, guys. Okay, how and where do I buy stocks? Now, a lot of people have their preferences. Here's a couple of different ones. There's the United States, there's UK, and so on and so forth. But what I want to say here is the brokerage you pick is kind of like picking a gym. They all got pretty much the same stuff. Fidelity is a great one, Leslie. I didn't list them all. There's obviously more. I actually am a big fan of Robinhood, one that you might have heard of. I'm a huge fan. Now, previously, I talked a lot about M1 Finance. Why? Well, they were paying me $50 per person who signed up, so that was pretty good. And they were also paying that person $50. But M1 Finance does have a lot of amazing features that, for example, SoFi or Vanguard do not have. M1 Finance lets you invest percentage-wise. So instead of investing $1, it says, do you want 1% of your money to go towards Tesla or 10% or 5%? So it's percentage-based. Vanguard has a lot of history behind it, probably great customer service. Charles Schwab, Fidelity, they have the nicest people working there, but there are barriers to entry. With Fidelity, you are not allowed to place a trade outside of the stock market hours. So if you're working from like 6:30 a.m. till 1 p.m., you better do it while you're pooping because Fidelity doesn't let you do that. Vanguard, if you want to automate this process and make it hands-off where robots do it for you, well, I hope you got $3,000 to start. So that's like a big problem there. So they're saying Vanguard's in the UK too. That's awesome. They're a global company, Charles Schwab as well. But they also have different features depending on where in the world you are. The prices are different. So because I'm US based, I know more about US based features. And in the United States, we have the greatest privilege of all. Free trading. Robinhood made or forced the whole industry in the United States to make it free. This is unreal. Unreal. We are living through a financial revolution right now. Unreal stuff. This has never happened before. And I think that people are kind of sitting on their privilege, just sitting on it. So that's not really cool, right? I want us all to use our privilege. Like there's one thing about having privilege, but it's another skill set to use it. So that's very, very important. Andre is listing some other cool features of Charles Schwab. And guys, if you opened my emails and you're in the United States, I sent you Webull, I sent you Charles Schwab. If you click those and you made an account for Webull, we both got like $25 plus. But if you made a Charles Schwab account and you were new to it, you got $100. I didn't get anything. I'm making sure that I'm sending you guys every resource I can because some people are nervous to start investing with $100, for example. So I want everyone to have access to this. Unfortunately, this is US only, but I'm sure that there are similar types of promos that are happening in your part of the world. But in the US, I will be sending another email. Fidelity is giving away $100. And I believe you can even have an account with Fidelity already, as long as you make a new account. So if you have a brokerage, you can make a retirement account like a Roth IRA. So that should pay you $100. And if you click through all of my emails that I'm sending you, my goal is to give you guys hundreds of dollars using these platforms and what they're giving away, because this is free money. they are doing this as promotion, right? They don't want to spend on targeted ads. They want to diversify the way they're getting clientele. And hopefully, if you invest with them, they hope to turn a profit maybe 5 years from now, compounding those little 3-penny fees that you're paying for your funds, because it does add up, especially over decades. So that's one reason that they're doing those types of things. We're going to talk about those accounts in a second, Leslie. I know you typed a really good question. So if Bank of America is destroyed, your money is protected up to $250,000. Here is a quote from the M1 Finance platform. You are protected up to $500,000. Up to $500,000 if they get hacked or something like that. I've never heard of that happening. Now with crypto, that has happened. And every crypto platform that I know of that's big enough, they actually did protect your money. So even with crypto, you are somewhat safe, although it's not guaranteed. While with stocks, it is guaranteed. Now, I'm not saying if you buy a stock like Apple and you put in $5,000 and it drops to 1,000, that they're going to pay you 4K. I'm saying if for whatever reason they get hacked and all that money is stolen, you are protected. So you would get your money back in that case. But I've never heard of that happening. I've never heard of a platform being hacked or something like that. This is how it looks like on Robinhood. Unfortunately, my Canva is acting up, so I don't have the images here, but I will just walk through it verbally real quick. This will take 30 seconds. When you are on the main platform for Robinhood, I'm using Robinhood because it is just a very easy platform to use. I'm not saying it's the best. I'm not saying it's the worst, but I am saying it has the most amazing features that I have ever seen. So it doesn't have the percentage thing that M1 Finance has, for example. It doesn't have great customer support like Charles Schwab or Vanguard or Fidelity, but it does have a feature where you can, yeah, for some reason, I'm sorry, guys. I don't know why it didn't load, but for the features that it has is you could click any stock, cryptocurrency, and you could click buy. And then in the top right-hand corner, it'll say dollar. You click that, and then it'll let you select, do you want to invest daily, weekly, monthly, bi-weekly? So that's really cool. You could literally be investing $1 a day if you feel nervous about this, or $5 or $10 or $300 a day, or you could do it a month. What I do, and again, no secrets here, I live very frugally. I live at home. I live with my mama. My mama charges me a little bit for rent, but for the longest time she didn't, because she's like, yo, boy, you building generational wealth in a way that I did not know was possible. So keep going, keep doing your thing. I'm not going to charge you anything. Don't worry. So if you have that type of privilege or any privilege, learn how to use it and use it wisely. Too many people waste their privilege. And this is not a rant about privilege and how it works or anything like that, but it is important to recognize the advantages you have in life. And everyone has some sort of advantage. You got internet, we're here, we're talking. This is your privilege, and you are using your social media privileges wisely by being here. In fact, I want my kids to inherit money. I want all of your kids or family members or people you love to inherit money from you guys. We want to make this easier. Why? Not so they don't struggle and learn and persevere, but so they don't worry about money and they could worry about traveling through space and time and maybe creating something humanity has never ever seen before, right? I want to get past this capitalistic part of society, right? Even Karl Marx, the communist leader and founder, he believed, at least my interpretation of his writing, that capitalism is an important step towards understanding and learning about human behavior and getting to what he thought was utopia, which was what he called communism, right? And we tried that, and maybe we didn't get it right. I don't think we got capitalism right all the way either, but we're supposed to learn from this system so we can build a better one. If everyone invests, capitalism literally falls apart. It cannot sustain the whole population being financially literate. It is impossible for everyone to basically, we need people in debt for this to work. There's good debt, there's bad debt, but that's more like stock market 102. So if you're interested in that, definitely buy some of my courses and we talk about that type of stuff. Andre is scared of time travel. I don't know if he's actually scared. So what's next, right? This is the final part of what we're talking about, and we will do Q&A, and I will let you know if you guys want to keep on learning with me. I definitely got products you can purchase, but what is next? Investing in a recession with high inflation. These are some strategies that people are using. So there's different types of stocks. There's dividend paying stocks. These are usually traditional stocks like Walmart, like Target. But we did see that they even fell. But guess what didn't? Costco. So the whole entire industry is not falling linearly. So it might be smart on your Robinhood apps or Webull, right? If you do Webull, we both get paid at least $25 each. Make sure you click those links, right? I always send them because it takes like a few minutes to take advantage of, and you guys get paid. A friend of my work got $3,000 by clicking the Webull link because he got a share of Amazon. They actually mean it when they say you get up to $12,600. Some people actually do. It's rare, but it happens. I usually get around $40 every time that someone makes an account, but I say 25 so people can be more excited when they get more. Maybe I should start saying 40 and more people will make it. But dividend paying stocks traditionally do very well during a recession, during times when people are saving money. These are companies that are old school, but not every dividend paying company is old school. And don't be excited by a high dividend. Sometimes a low dividend compounding over time, meaning when you get paid out that 90 cents for $100 invested, you take that 90 cents and automatically it buys more stocks. That's how people like Warren Buffett get paid $11 million a day when he's 90 something years old, because all those little 90 cents multiply up. When the stock market crashes, you're still getting paid the same dividend. So that 90 cents or $2 or whatever goes a lot further. And I am surprised because my dividends for Apple, I used to get like 30 bucks. Now I'm getting like $200 a year. And I know people like 200 bucks a year, that's not much. I'm like, bro, in 10 years, that could probably cover, at the rate that it's growing, that could probably cover an entire vacation. Like if I get to $2,000, I actually did get to 1.5K in dividend payouts. This is not stock growth. This is just dividends being paid out. This is profit that is shared with a company. I reinvested. I choose not to take the cash because I want more money being invested while I'm in the wealth accumulation phase. Later on, my investment style will change. It will become more defensive. That's maybe when I'll buy a little bit more gold and things like that are supposed to be blockers, defensive, wealth preservers. But when you're building wealth, I believe, this is my personal opinion, not financial advice or anything like that, but I believe that it is time to be aggressive as possible. It is okay to watch your portfolio fall 50% and then rise 100%. That is okay. And in that example, you actually end up in the middle where you started. But for the most part, when COVID happened, I lost 5 years of profit. That sucks. But did I sell anything? No. I kept on buying. And guess what happened? I doubled my profit within a year. Because I was buying when my mom was saying, you don't know what's going to happen. There's this transition between Biden and Trump and COVID. And every day Trump is talking like people are dying in Italy. This is the end of the world again. Right. So I just kept on investing in buying stocks. Now, I don't mean to cartoonize my mom or anything like that. She's great. She actually didn't sell any of her stocks, but she stopped buying, which means she missed out like most investors do. They get terrified watching your $100,000 turn to $60,000. That's what happened to me. Index funds, right? Buying conglomerate of stocks, all of them in one place. REITs is basically exposure to real estate. So you can buy real estate through the stock market. That's what my mom just did because she believes that Real estate might be a little bit more sexy during a high inflationary environment. It's also a way to diversify. You could buy a little bit of this, a little bit of that, and a little bit of the thing on the bottom. Now, finally, Leslie asked about Roth IRAs and 401ks. This is the last slide I'll talk about before opening up Q&A, and we'll do that for a little bit. I'll try to answer every single question though. But Roth IRAs, 401ks, if you're not in the USA, you probably have something very similar to this. The advantage of these is my first job did not pay me or did not offer a 401k. So what did I have to do? I made a Roth IRA. So I'm not waiting for the system to help me. I'm using the tools that I'm given to help myself. So a Roth IRA is an account where if you earn under $140,000, you are allowed to contribute to it. If you earn more, you cannot. You can contribute up to $6,000 a year. If you're over 50, then it's 7,000. Usually when you're over 50, they let you contribute more to these accounts, and it's called catching up, a catch-up contribution. In these accounts, a lot of times when you sell a stock, you pay no taxes. Sheesh. That's amazing. We always talk about billionaires not paying taxes. Did you know you don't have to either? That's why investing is so sexy, so lucrative. You're building wealth and you're tax sheltered, or you're paying less taxes as long as you're not trading stocks. If you're trading stocks, you're probably paying a lot of taxes on your profit, which people forget to calculate for. But in a Roth IRA, every dollar you put in, you don't got to think about it until you're 59 years old. Now, if an emergency happens, or you have a baby, or you have your first home, the government lets you take money out without consequences. So it's a flexible account. You can also pull out any money you put into it. So say you put in 6K and it grows to 10K in 5 years or in 3 years. You could pull out that 6K contribution, not the profit though, not the profit. With that being said, there's the 401ks. A lot of people at my job don't take advantage. And I preach, I am the same as I am on Instagram in real life. I'm running down the halls at work. The market is crashing. Buy stocks, guys. And I guess kind of like there's that annoying guy at work who just doesn't really like he seems like a cartoon, and that's me. I am that guy at work, and people are like, okay, but I did get a lot of people investing. They got like $200. I made sure my coworkers got $200 by clicking those links, making Fidelity, making Charles Schwab, making Webull, making M1 Finance. And some people might think you're only saying that because you get paid. The biggest ones I don't get paid for. I want you guys to win because I want to move on from a society that is money traumatized to space travel. I'm ready for that next step. Why do you think Jeff Bezos and Elon Musk doing this? Because they got past that point of money trauma. So with that being said, 401ks, you get a match. So if you put $1 in, a lot of times your employer will give you another dollar. In my case, it's a quarter. Am I complaining? No, because receiving a quarter for every dollar is actually getting 2 to 3 years of stock market returns risk-free. Now, some people might say 401ks are scams. There's always that guy on the comment section. The reason they're saying that is because I think they truly don't understand. Money for retirement has ways of getting it out without paying penalties, like I described with the Roth IRA. In the 401k, say you leave your job, you need to make sure that there is a vesting period. So there's the vesting period reached. There's fine print with your employer. It'll say you have to stay here for 2 years to get your match. So if you leave before that time, your 401k, you will not get that gift money that they gave you. It's not really a gift. You earned it. Okay. So claim it like it's yours. You deserve it. But you can then roll it over. And instead of putting it into another 401k, you put it into an IRA. Then you could put it into a Roth IRA. And in 5 years, you get your 401k money. Yeah, without waiting till age 60, without paying penalties. Why? I have no idea. It just works. There's a lot of weird little tax loopholes, and it's not for billionaires. It's not just for billionaires. We can all do it. So here's some more me reminding myself to tell you guys, please take advantage of the links that I'm sending you in your emails because it's free money. About 3% of people who received and opened the email actually clicked the Schwab link, the Fidelity link, the Webull link. 3%. It is free money. I get it. It's scary. It's terrifying. And it takes a little bit of work. But honestly, you're not going to get paid $100 at your job for 4 or 5 minutes of labor. You're not going to get 10, 15 free stocks at your job for staying an extra 3 minutes. So take advantage of this. It's psychology. The system doesn't want us we're designed in a way where we don't want to try new things. And basically 4 or 5 minutes of your time can better your life, create all of these accounts for you. Someone asked earlier that, hey, is it worth having a lot of different accounts? Yes, because I don't know if you guys remember, but in 2020, Robinhood stopped working for a day. So if you wanted to invest, too bad, so sad. You needed to have Merrill Lynch. You needed to have Charles Schwab. You needed to have Fidelity. You need to have Ready. So these accounts that I'm sending you, I will keep sending it to you, but these are very time sensitive. Sometimes I say that and people feel like I'm pressuring them to make the account, but the reason I'm saying that is because they do disappear without warning. So people make a Schwab account and they deposit $50 and get a $100 bonus. Fidelity does the same thing. On Webull, you deposit 1 penny. Robinhood, I will send you a link for that too. You get about a $5 stock, but for like 2 minutes of work. Imagine getting paid $5 for every 2 minutes or $2 a minute, $2.50. That's really, really cool stuff. So make sure you're taking advantage if you're in the United States. And if you're not, just go Google search and there's probably something in your region as well. That being said, let's see. Oh, okay. Yeah. So if you guys do want to learn more before we do the Q&A, I do have courses, I have sales and things like that. Don't worry, everyone in my email list will get notifications of events, future workshops. Every now and then I do a free one like this, but I do have ones that are more intricate and more advanced on crypto, on NFTs. Right now, in about 2 weeks, there will be a promotion on my Stock Market 101 program where everyone who completes it, well, you got to buy it first. If you complete it, you will receive the NFT workshop. You will receive the crypto workshop as gifts afterwards. And the reason why I do that is because I want people to learn about stocks before they learn about NFTs, before they learn about crypto. I want everyone investing in the market because it's just honestly the laziest path to wealth, in my opinion. It's much easier than real estate because that requires getting out of your house. While stocks, you're just typing buttons on a keyboard. Some features that might interest you before we start the Q&A about Stock Market 101 is some people just like the modules. So it's self-paced modules. There's about 9 or 10 of them, and I do add content to them. For example, one of the latest modules was really interesting. It is a 2020 assessment of a 2008 article about the 1930 crash. So it gets nerdy like that, but at the same time, it does have the cookie cutter stuff. It's designed to save you time. So make sure that if you don't have 500 hours like I put in and studying all of this, just go ahead and purchase a course. Does not have to be mine. Purchase some books, but again, that takes time to read, and go for it. Some podcasts for you guys is Money Tree Investing Podcast. That's a great one. Another great free resource is Choose Fi. I love those guys. They talk really down to earth material. But again, if you want to save time, buy a course. Does not have to be mine, no pressure, but I wish that I did when I started in 2015. Now I'm a very frugal person and I probably wouldn't, but it would have saved me a lot more money. I have made 6-figure mistakes that I talk about in here. And again, if you have any questions for me, feel free to ask, feel free to DM, and we're about to start the Q&A. The last feature of Stock Market 101 is that there are weekly Zoom nights. So once a week on Wednesday nights, we all meet up And sometimes it's intimate. Sometimes if the stock market is crashing, everyone hops on. They're like, hey, we got questions. Can you please calm us down from selling our stocks? And we talk about NFTs and crypto and all sorts of things. Sometimes I have guests who talk about different side hustles. I'm trying to get my friend who flips TVs and fixes scooters up. And that's one of his side hustles that brings him about 800 to 1,000 extra dollars per month. So those are all the cool features that you get with Stock Market 101. And with that being said, I am done pitching my course. And again, you guys will get early access to the sale. If you're interested in purchasing it, just be on the lookout for emails that are coming from me, and you will probably see more about this on Instagram. So with that being said, I know some people came late because they misinterpreted the time, right? Like it's West Coast Pacific. So if you just hopped on, you made it to the Q&A section. So right now, if you guys have any questions, feel free to fight for the microphone and ask whatever you want to ask. If you're shy, feel free to type it in. So if you have any questions, I'm gonna just sit here quietly and you can ask your questions. And I'm very good at silence, very good. I know someone asked a question earlier. Leslie said, if you pull out 6K, what happens to the profit? Emily responded, it stays compounding in the account. That's right. Say you bought $6,000 of Apple and it grows to 10,000. You sell $6,000 of it. Well, your $4,000 is still invested and still doing its thing. If Apple's going down, that 4,000 is going down. If Apple's going up, that 4,000 is going up. Karina is asking, are you a fan of multiple brokerage accounts with various different companies? So yes, I am a fan of having a Fidelity account, a Charles Schwab account, an M1 Finance account. Why? They all take 3 to 4 minutes to create. So with that, I'm usually getting paid for creating these accounts, which is awesome. I will take $100 for 4 minutes. But even if they did not pay me to create accounts, I would still take advantage of these accounts. Why? Because during one of the best trading days, the market went up 10% and Robinhood was shut down. One time, my Merrill Lynch, which is connected to old school, old head, Bank of America, was down. I could not log on into my account. And I did not panic. I know it's Bank of America, we safe, we good. But if I wanted to buy stocks that day, I could not. Now, the quickest way to buy stocks is Merrill Lynch, which is tied to Bank of America. So you literally transfer your money and it's there in a second. But there are cons to that platform. I would not recommend it to people, even though it looks beautiful. It just does not have the features that a modern day account should have. Robinhood does. If you say you want to invest $6,000 in the next 3 minutes, you can, well, it's a weekend, so stock market is closed. But if you want to buy crypto, you could do it in 10 seconds on Robinhood right now. And it'll take your money 3 days to transfer, but they will let you borrow that money until it appears. So that's really awesome. Foster parent, that's your username. I'm not sure if that's your name. I don't know if it is, but that's very noble work, by the way. Will the recording of this be available? Yes, I do hope to upload this to YouTube so you guys can scan through it. Check out my YouTube. I am always sending you guys videos about mindset, different things about stocks and things like that. But again, for the most bang for your buck, I did create my course to save you money through the long run. If you're making $1 million decision, you definitely cannot be frugal in doing that. Now, Karina has a question as well. I already answered that question. Before I answer Emily's question about global funds, I will let anyone with a microphone who wants to ask a question also ask a question out loud. Say you want to share your voice. Andre, what you got? I see you.
Okay, so my question is, if you already have stocks, can you move that to a Roth IRA or no?
Very great question. So let me think about that actually, because you can move stocks from one brokerage platform to another. Usually there is a fee. So say you want to leave Robinhood, If you want to leave Robinhood, you usually pay $75 and it transfers your stocks to like Charles Schwab. But Charles Schwab will usually cover that fee if it's a significant amount of money. Like if it's like $2,000, they might cover it for you. If you want to move it to a Roth IRA, I actually don't know. That is a very good question. I believe you are not allowed to transfer the stocks into the Roth IRA. You would have to sell them. Why? Here's why. Because say you bought Tesla at $100, right? And it goes up to 1,000 in your brokerage. And now you're transferring it to a tax-free account. You owe money. You can't just decide later on that I don't want to pay $900 in taxes, so I'm just going to transfer it to my Roth IRA. So I'm 99% sure, just like kind of logically thinking about it, that would be an unreal loophole, and you're not allowed to do that. But Andre, there is a way that you can avoid paying taxes on stocks that you already have. This is very niche, and I don't know if it'll benefit any of you right now, but if you want to give it to charity, you can transfer it to a tax sheltered account. And that's a cool thing that you can do. But in a Roth IRA, I don't think that you can transfer from a brokerage, skip paying taxes, and put it into the Roth IRA. You would probably have to sell it. Hope that helps, Andre. I see a little smile. All right. Karen has a question. Oh, sorry. Emily was first. Are global funds good? Maximize on diversification. So again, remember when I talked about Warren Buffett and he says that Bitcoin, he would not consider an investment. Gold, he would not consider an investment. Different people have different philosophies about investing. So some people will answer global funds are great. You will protect your wealth. You will get access to other markets. I am a fan of having a small section of my portfolio in international companies, international funds. Some people like the great late Jack Bogle, creator of Vanguard, creator of the modern index fund, he always preached having like 20 to 30% in international funds. That being said, there are people who disagree with that philosophy when you are accumulating wealth. When you're accumulating wealth, they don't like to play defense. So by having too many things, you're actually exposing yourself to slower growth, because the more you have, the less it'll grow, because one thing will fall, another thing will go up. If you have like 2 or 3 stocks, well, you're either going way down or way up. And there are billionaires like Charlie Munger who swear by lack of diversification. They will own 3 or 4 companies for 50 years. But there's also rules around that. So one quick hack, maybe this is TMI, but the company Berkshire Hathaway, we talk about this in Stock Market 101, but just a brief little synopsis. Berkshire Hathaway is one company, but it owns a lot of different companies. It owns See's Candy, it owns Apple, pieces of Amazon, Restoration Hardware, so on and so forth. So there are ways to diversify with single companies if you don't want to go the ETF route. So Emily, I don't know if you disconnected for a second, but I did answer that question. If you didn't hear all of it, it will be in the playback, which I hope to send to you guys within 48 hours. Please be checking my emails. The next one will be about Fidelity, I think, where you can make an account and get $100. Karen is saying, is it okay to go through my credit union to open a Roth IRA account? Or what is the best way? What I would do is do it yourself. I would go on charlesschwab.com, make sure it's the real site, and create Roth IRA there. I have a YouTube video tutorial. You could go on Financialism on YouTube and click Roth IRA Financialism tutorial, and I will walk you through the steps of creating a Roth IRA on Charles Schwab. I would recommend making a brokerage account on Charles Schwab first, even if you don't plan to use it, because they pay $100 for your first brokerage account, which is awesome. And again, I do talk a lot more about Roth IRA hacks and shenanigans in Stock Market 101, the laziest path to wealth. And all of you guys will have a discount code sent to you before it is on Instagram. Top 3 ETFs. So an ETF is broken down in module 2 of Stock Market 101, but a synopsis is It is an exchange traded fund. So it is a lot of stocks inside of one fund. It's got Disney, it's got Microsoft, it's got all of that inside of it. There's different ETFs that focus on different things. There's a whole entire metaverse ETF. So if you're like, I want exposure to the metaverse, but I don't really want to buy Facebook, what else can I do? You can buy the ETF, or what I like to do, you can copy the stocks inside of it and create your own ETF on M1 Finance. That's what I'm saying. Different platforms have different advantages. And again, Stock Market 101, we talk all about that. My favorite ETF would have to be VOO, which is the top 500 companies. And I talk about my 20 other favorites inside of my course. I definitely like having different ones. Mayella is saying, or Mayella, I'm sorry if I'm mispronouncing your name. Can you speak on the upcoming Amazon stock split? So a stock split was very popular in the 90s. What this does is, say there's one share of Amazon and it cost $1,000. They will break it into different pieces. So say they break it into 10 pieces. Now, instead of having one Amazon share, you have 10, but they're now $100 each. So did your money go up? No. Did your money go down? No. But you have more shares. There are very advanced things that are important to know when it comes to this. That was a very silly way to say that. But the more shares you have of a stock, unlocks a stock market 102 type of strategy, which is called covered calls. So essentially, when you have 100 of positions of a stock, you can use this strategy, which is a practical thing that does help create some passive income by increasing some risk in your portfolio, but you can be doing that, and stock splits help with that. Stock splits also allow company stock price to go down, which helps them get into more ETFs, more funds, which is important because some funds don't want Amazon because it's like a 2,100 whatever dollar stock. And it will outweigh the other stocks inside of it. So with that, that might push Amazon higher. Is it a good time to buy Amazon? Well, no one is psychic. Traditionally, big companies like Amazon, Apple, Tesla, they did go up after a stock split. However, how long do they stay up is pretty much anyone's guess. Can it go down? Absolutely. Will it? No one knows, but odds are it might spike up a little bit, but odds are not a guarantee, or they're too far from like 90% like certainty. No one knows. But the con would be you're just buying it because of the stock split and not because you believe in the company, which means if the price goes down, you might lose money and not feel comfortable holding it. Again, when I buy a stock, I'm getting married. I'm holding it for life, except to diversify further and sell for tax advantages and things like that. But anyways, any suggestions for parents to invest for their kids? So yes, if you want to invest for your kids, if you own a business, your kid could be your model, right? And again, we do talk about this stuff in Stock Market 101, but I am answering every question. But if you want this organized, right? If you want this in a very clean cut way, definitely look out for that email talking about Stock Market 101, the laziest path to wealth, discount code coming up. And I'm always proud to promote my stuff. Some people are like, how come we got no shame? I'm like, because I created one of the greatest products that'll change your life. Why would I not talk about it 24/7? But yes, if you have your own business and you pay your kid, it has to be a reasonable amount of money. So say they're modeling and you pay them $900 an hour, that's not going to cut it. But if you pay them $30 an hour and they model for you for 10 hours a month, well, hey, now you can contribute to their Roth IRA when they're 2 years old, which means by the time that they're 59, they will have a solid chunk of change waiting for them. Please do not forget to actually invest inside of the Roth IRA. Too many people forget to. They think, oh, 401k, my employer does it for me. It's up to you. Too many horror stories. People did not invest inside their Roth IRA for like a decade. Other things you could do for your kids, there's accounts for college, 529s. There's accounts that are just for like custodial accounts. So you can totally kind of choose which path is best. I like the path that is not locked in for college. So maybe your kid could, because if it's not locked in for college, there's less tax advantages, but there is more freedom for them to use it however they want when they're 18, right? We don't know what's going to happen to colleges and prices or anything like that in 20 years or 18 years or 10 years. We don't know. It's probably going to be higher than it is, but I would actually suggest learning to write for scholarships if you're trying to make money for college rather than investing your way there. There's a lot of people who will give money. In 7th grade, I wrote a 2-page paper. I don't even remember writing it, and I won $2,000. So did my friend. We were 2 out of 2 people who actually did it. There's very few people who went through with these scholarships. So there's a lot of money for kids for scholarships. I do have a YouTube video on hacks in the USA for a kid to get ahead. For example, taking AP classes instead of working, taking community college classes. You could basically cut costs like that and qualify for all sorts of fee waivers as well. Maria is saying different topic, but does your crypto course teach how to set up bots or how to earn interest? It talks about how to earn interest on accounts. In short, the crypto space is very dangerous, but if you know how to navigate those dangerous waters, you will be greatly rewarded. But Fidelity has a study and it says, if you want crypto to change your life and you're a long-term investor, meaning you've been investing for like 7 years or more, you're going to be okay with like a 3 to 5% exposure to cryptocurrencies. That being said, my mom, who's very conservative, she does have money in stable coins. She actually just pulled out because of all the crypto scares, just to wait for the waters to settle down, because unlike the stock market, there is only 10 years of history. So with that being said, yes, the crypto course does cover interest-bearing accounts and lending and all of that, although that environment is quickly changing. Is it best to max out a Roth IRA first from Karina or access money into a brokerage? So a Roth IRA, right? You're going to get the most bang for your buck. You're not paying taxes, but it is stuck until 59 and a half. However, for the most part, with exceptions, and we talk about those exceptions earlier, and I cover them in Stock Market 101. Now, when it comes to an individual brokerage, there are ways to not pay taxes on your stocks. What? But I thought that was only for retirement accounts. There are ways to do that. So one example is there was a certain amount of money that you could pull out if you have no other income or if you have very low income, and it will be tax free. That's a lot of nuance to get into for this free event, but there is a whole entire module dedicated to that in Stock Market 101. So I hope that gave you enough of like an incentive to research on your own or to buy a course or to read some books on it, but it is possible to invest tax-free in a brokerage account as long as you're doing it smart. Rules do change. That being said, it is up to you to decide. Is it best to do a Roth IRA or individual brokerage? If you want the most amount of money for age 60, then it is the Roth IRA. If you want to live a work optional life sooner, then it is the individual brokerage. A combination of the two is what I prefer. Some people do like to get the most amount of money in life that they can, though. So they do choose the Roth IRA, or maybe they're in their 40s and they have maybe 2 decades instead of 3 decades. And that way they will get more bang for their buck in a 20-year period. Leslie is asking a great question. What should I tell my 13-year-old to do now to prepare for the future? If your 13-year-old gets some sort of allowance, you could try teaching investing principles. I'm a behavior analyst. I work with kids mostly on the autism spectrum for my 9 to 5. And in my 9 to 5, I create money programs for them as well. But it's learning how to learn skills for a lot of them. Some kids have aggression, huge tantrums, all of that. So I'm pretty confident in my skill set as a behavior analyst working with kids. So for a 13-year-old, what I would do if I were their parent, maybe I would give them a couple of dollars a week. And I would be like, look, if you skip this week, the next week, you get an extra quarter. If you skip 2 weeks, then you will get an extra $1. If you skip that, and that's how they learn. Wait, if I wait, I get investment. Okay. You could also do that with rewards. For example, if they're doing their homework, right? Hey, and they're like complaining about it. I don't want to do my homework, blah, 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 blah. If they complete 1 page of homework, they get X, like they get some 20-minute cartoon time with you. Or if they complete 6 pages of homework, then they get cartoon time with you. You're going to Chuck E. Cheese and you're getting ice cream. So the reward for doing more outweighs it. But also, you could just start investing with your 13-year-old and make them a custodial account. A great YouTube channel is Our Rich Journey. Our Rich Journey. They have a video with their kids. I believe they were age 9 and 13 at that time. And they actually invested, and they had like $20,000 or something invested as 13-year-olds without getting money from their parents. They actually worked for it or got gifts on their birthdays, and they've been investing it since they were wee little lads. So that's something else that your 13-year-old could think about. But if you want them to do scholarships, they might get more money out of it. But again, it is up to them and up to you. Is FDAIX the same as VOO? It's FXAIX. So FXAIX, that is the Fidelity version of VOO, which tracks the top 500 companies. So I hope, guys, that this answered a lot of your questions. I will be sending an email to you all probably within the next 24 hours. And in the next 48 hours, there will be another $100 opportunity for people in the US to take advantage of with Fidelity. So please check those emails. I do want everyone here to build generational wealth. I am very, very passionate about this because we don't got time to be traumatized about money. I want to see in my lifetime the next society, right? I want to go to the moon literally again for John F. K. So with that being said, check out my music on Spotify. You will get earlier access than anyone else on Instagram for Stock Market 101. If you choose to purchase the course, you don't have to. Once again, it comes with Wednesday night Zooms. That is just an extra perk. The modules will walk you through a lifetime of skills for your class. And I promise you, it's not a $100,000 course, even though in college, you have to pay $100,000 for a sheet of paper. And people do make fun of NFTs. Can you believe it? People will make fun of a picture of a monkey that people paid 100 grand for, but here's a sheet of paper, right? There's people who outside, I'm not just in college. I went to UCLA. I got my master's in applied behavior analysis at ASU. So I'm just saying that it's all perspective. So don't make fun of monkeys on the internet, and make sure that you're buying and investing in yourself as well. Knowledge will pay the ultimate dividend. I think Benjamin Franklin said something like that. Knowledge pays the best interest. So I learned for the last 7 years while driving and listening to every podcast, literally interviewing millionaires, people who have already done it. And so I feel like I have a lot of value to give you. And I always try to make free events like this. But if you want constant access to me, buy that course, make the investments, and I will see you guys on the flip side. Sending you so much love, so much passion. You can do this. Reach out. Georgie Roykman, Financialism. I'm your boy. I got your back, your front, your sides, your hips. And with that, peace out. I appreciate you all. Click those emails. Click those emails.